Bismillahirrahmanirrahim. Final examination presentation video presented by Parvez Ahmad Chandio, batch number 2K19 LBBA 61, subject Principle of Insurance, supervised by Ma'am Indra Mughal Sindhi, and my topics are life insurance, types of life insurance, general insurance, and types of general insurance. So my first topic is what is a life insurance. A life insurance or life assurance, especially in the Commonwealth of Nations, it is a contract between an insurance policy holder and an insurer or assurer, where the insurer promised to pay a designed beneficiary a sum of money, the benefit, in exchange for a premium upon the death of the insured person, often called the policyholder. Depending on the contract, even other events such as terminal illness or critical illness can also trigger payment. The policyholder typically pays a premium either regularly or as one lump sum. Other expenses such as funeral expenses can also be included in this benefits. Now I will define the this now. Now a life insurance policy is an agreement between an insurance company and a person, or it is a legal entity. Each life insurance policy is different according to its types, and each state laws regulating insurance policies are very different. In general, most insurance policies identify the following things. Number one, the insurer. Only certain companies can provide life insurance, and these companies are regulated by the state laws and insurance departments. The second is the policy holder. The person or entity which holds the policy or which holds the contract are called policy holder. The insured. The person whose life is insured is called a insured person. That the death benefit. The amount the insurer will pay when the insured passes away is called the death benefit. Now, what are the beneficiaries of life insurance? The people or entities that will receive the death benefit, it can all go to a single person, example, a survived spouse, or it can be divided by percentage among many different people and entities. Example, 3 children could get 30% and 10% could go to a charity. Now, what is the policy length? The time period that the insurer agrees to pay a death benefit. This can be a specific term, example 10 to 20 years, or it can be permanent. A policy that lasts for the life of the insurance for as long as premiums are paid. Now, what are premiums? The monthly or yearly payments needed to keep the policy in effect is called premium. Now, what is the cash value? Permanent life policies like whole life insurance have a cash value component that builds over time and can be cashed out or borrowed against. A term policy has no cash value. Now my second number topic is types of life insurance. So the first type of life insurance is term insurance. Now what is term insurance? Term insurance is a type of life insurance policy that provides coverage for a certain period of time or a specified term of years. If the insured dies during the period specified in the policy and the policy is still active or in force, a death benefit will be paid is called the term insurance. And now the second type of life insurance is whole life insurance. Now what is whole life insurance? Whole life insurance is a type of permanent life insurance, which means the insured person is covered for the duration of his life as long as premiums are paid on the time. And the third type of life insurance is endowment policy. An endowment policy is a life insurance contract designed to pay a lump sum after a specific term on its maturity or on death. Typical maturities are 10, 15 or 20 years up to a certain age limit. Some policies also pay out in the case of critical illness is called endowment policy. Now the fourth type of life insurance is money bank policy. Now the fourth type of life insurance is money back policy. In a money back policy, the insured person gets a percentage of sum assured at regular intervals. Instead of getting the lump sum amount at the end of the term, it is an endowment plan with the benefit of liquidity. Now, what is child plan insurance? Child plan insurance is a form of permanent insurance of life insurance that insures the life of a minor. It is usually purchased to protect a family against the sudden and against. Now, what is child plan? Now, what is child plan policy? Child life insurance is a form of permanent life insurance that insures the life of minor. It is usually purchased to protect a family against the sudden and unexpected costs of a child's funeral or burial and to secure inexpensive and guaranteed insurance for the lifetime of the child. And now pension plans. Now what are pension plans? A fully insured defined benefit plan is a retirement plan that provides guaranteed retirement benefits to the owners and employees of a company. As with all defined benefit plans, the employer makes annual contributions to the plan to reach a funding target. Retirement plan is a plan. Now what is a retirement plans? Now what are retirement plans? Retirement plans are plans especially designed to provide you with funds at your retirement. The funds accumulated during the savings period will be available to you on retirement so that you can enjoy your life without having to worry about income or compromising on your lifestyles. Now, what is unit linked insurance plans? A unit linked insurance plan is a product offered by a now what is unit linked insurance plans? A unit linked insurance plan is a product offered by insurance companies that, unlike a pure insurance policy, gives investors both insurance and investment under a single integrated plan is called unit linked insurance plans. And my third topic is what is general insurance. Its definition is insurance contracts that do not come under the ambit of life insurance are called general insurance. The different forms of general insurance are fire, marine, motor, accident, and other miscellaneous non life insurance. Now, a general insurance is a policy or agreement between the policyholder and the insurer which is considered only after realization of the premium. The premium is paid by the insurer who has a financial interest in the asset convert. The insurer will protect the insured from the financial liability in case of loss. And how does the concept of general insurance work? Insurance is a concept that applies to a large group of people which may suffer from the same risk in the same conditions or region. The money collected as the premium can be called as a pool, and when anyone faces a loss, the person is paid from the that pool. On the other hand, the tangible assets are susceptible to damages, and a need to protect the economic value of these assets is needed. For this purpose, general insurance products are bought as they provide protection against unforeseen Now, the tangible assets are susceptible to damages, and a need to protect the economic value of these assets is needed. For this purpose, general insurance products are bought as they provide protecting against unforeseeable contingencies like damage and loss of the asset. Like life insurance, general insurance protects and general insurance products come at a price in the form of premium. And now my fourth topic and now my fourth topic is types of general insurance. The first type of general insurance is motor insurance. Now, the motor insurance is insurance for cars, trucks, motorcycles, and other road vehicles. Its primary use is to provide financial protection against physical damage or bodily injury resulting the traffic collisions, and against liability that could also arise from incident in a vehicle. Vehicle insurance may additionally offer financial protection against theft of the vehicle and against damage to the vehicle sustained from events that then traffic collisions such as skiing, weather, natural disasters, and damage sustained by colliding with stationary objects and etc. The second type of general insurance is health insurance. A health insurance is an insurance that covers the whole or a part of the risk of a person, incurring medical expenses, spreading the risk over numerous persons. By estimating the overall risk of health risk and health system expenses over the risk pool, an insurer can develop a routine finance structure such as monthly premium or payroll tax to provide the money to pay for the health and healthcare benefits specified in the insurance agreement. The benefit is administered by a central organization such as government agency, private business, or not for profit entity. Another type of general insurance is travel insurance. Travel insurance is an insurance product for covering unforeseen losses incurred while traveling either internationally or domestically. Basic policies generally only cover emerging medical expenses while overseas, while comprehensive policies typically include coverage for trip cancellation, lost luggage, flight delays, public liability, and other expenses. And now, property insurance. Property insurance provides protection against most risks to property such as fire, theft, and some weather damage. Another type of general insurance is commercial insurance. And now, commercial insurance. Simply, commercial insurance is insurance that protects businesses. It covers business against losses arising from things like damaged property or injury to employees. And now, what is fire insurance? Fire insurance refers to a form of property insurance that covers damage and losses caused by fire. Fire insurance policies typically contain general exclusions such as war, nuclear risks, and similar perils. And another topic of general insurance is marine insurance. Now, marine insurance covers the loss or damage of ships, cargoes, terminals, and any transport by which the property is transferred, acquired, or held between the points of origin and the final destination. Cargo insurance is the sub-branch of marine insurance, though marine insurance also include onshore and offshore exposed property, hull, marine casualty, and marine liability. When goods are transported by mail or courier, shipping insurance is also used instead. And the last type of general insurance is renter's insurance. Renter's insurance, often called tenant's insurance, is an insurance policy that provides some of the benefits of homeowner's insurance but does not include coverage for the dwelling or structure with the exception of small alterations that a tenant makes to the structure. It provides liability insurance and the tenant's personal property is covered against named perils such as fire, theft, and vandalism, etc.